Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 4th of September, 2024. We're about 5:55 p.m. Central Time. So it's more of the same. The stock market under pressure most of the day. Part of it, U.S. Steel. Now the government is saying that from one of our top allies. I don't get this. We want, on one hand, to work with our top allies. And if Nippon Steel wants to come in and buy U.S. Steel, and the plant's going to be here, what's the problem? They're willing to invest billions to modernize the plants. Instead, it sounds to me as though the Biden-Harris group are going to nix that. With that, we're down 22% intraday in U.S. Steel. Doesn't make sense. I guess Camilla, with all her plans, is going to now give $3 billion to keep steel here, because the first thing you're hearing is that U.S. Steel is going to close plants, probably in Pennsylvania. And the unions are behind this. They don't want to see a Japanese owner. Why? An owner's an owner. What's the difference? You run a company. They'll adhere to the marketplace. Doesn't make sense. Harris today, okay, so you want to start a new business. Well, if she's president, instead of you getting a $5,000 tax break on it, we're going to raise it to $50,000. So far, let me think. She might be giving $3 billion to U.S. Steel. Somebody's got to give them money if they want them to stay in business and modernize. She's going to take $50,000 for everybody that wants to create a business. Okay, that could be a write-off there. She's going to give $25,000 in first-time home buyer money for people to buy a home. Okay. We're going to raise corporate taxes thinking they can't move offshore. That's sort of craziness. I don't know by how much. And we're going to raise certain rich people's taxes, and you think they won't find ways around that. Okay. If you vote for it, this is what you're voting for, and that's great. We'll talk about Trump in due time, too. He's no angel. But as you're looking through all this, as I see it, you've got a stock market that's trying to stabilize in front of the big banana this week, which is the U.S. jobs report. And when we see that report, that's what everybody's going to look at. But the jolts gave you the whole flavor today. What's the flavor? It's so simple. You have weakening. Once employers aren't putting out the jobs, what happens? You got a problem. And they didn't just take a few off. They took over 400,000 off. It's a big number. It's a big drop. Don't you pass on that. This is a weakening jobs market. The Fed chair was right that they have to turn attention to it. And the way to do that is cutting rates. Now, whether it's 25 or 50 basis points, we'll argue that for another 2 weeks, even after the report comes out. But you're going to get a cut, and it's not going to stop at one. You're going to get a series in order to shore up the economy, which has now done this. It's not going to. The economy is doing this. So you're watching the stock market. It gives you an idea what's going on. When we get into the Spider ETF video, I'll talk my thoughts there too. Dollar down a bit, and I am not friendly to the dollar. I keep hearing people that are friendly. I don't get it. I think you had a bear market rally. I think you had a bull market break in the euro, and I think the markets after Friday will tell us which way it really is going to go. On the energy sector, if the big boy in the room, China, doesn't buy oil, and you're getting more production out of the U.S. and South America, how are you going to do this if OPEC wants to give you more? So OPEC's going to go behind closed doors, and you watch. They are going to come up with a way to say they are not putting more oil on the market, and they probably would be smart to have the people that overproduce continue to cut. At the same time, they got to be careful, and they know it. They don't want to lose market share, but the market's funny. They'll buy American oil today and they'll buy Saudi oil tomorrow. That's just how it works. As long as the grading will work on your refinery, that's how these things go. So, one of the ways that I like to get through the noise is I keep my eye on weekly charts, closes, not the high and low. I can see that the market has a problem with closes up here, and support's back at 54.71. There's no magic there, but you haven't been able to stay under that number since back here. Now, let's also understand, I always expect September, and I want to use that word always in quotes. I always expect in the stock market a weak September, and then the question is, does it carry to the beginning of November? Does it end in October? I don't know. But then I talk to you inevitably year after year about the upcoming Santa Claus rally, and that is just what I think is going to happen again. So I don't know, but I'm guessing that we'll be looking, can we challenge those highs as we get into late November and into December going into Christmas. Do we understand that? That's where I'm thinking right now things are going to play out. When I look at a daily bar chart, I see a market that's got a problem. I see not a perfect, but I see a shoulder, another shoulder, and a head. And it's, okay, that's a head and shoulder formation, inverted. If the market were to clear these highs, then you're talking the 6,000 level again. That's if it did it. Right now, you're correcting. That pattern can be broken, by the way, as well. When I put the swing line on it, you get to see it even better because the shoulder shows itself more and with this. And the swing line is an indicator I wrote years ago. It makes it easy to say, is the market trending or not? An uptrend has higher highs, higher lows. Downtrend, lower highs, lower lows, and no trend, which is prevalent now, a higher high and a lower low than the last low. I'm in a correction phase. That's how I look at it. Often when markets are correcting, they try to go back to what I call the line in the sand, the 18-day average of closes. If that doesn't hold, then look for underneath it. Is there another moving average or a Bollinger Band? In this case, the next support would be the 100-day average at 54.34, and the Bollinger Band comes in right around it now at 54.22. So that to me is going to be, if the market breaks down there, a very big support area and one that I'll be licking my chops at, looking at it really hard, because I would expect that by year end, you'll be away from that number. Okay, that's just giving you a game plan. Game plans have to be executed. That's the hard part. So I'm looking for that battle, and then I look at momentum. Well, suddenly with tonight, we're knocking on the door of being oversold. Any reading under 30, and we're at 31, is oversold. So if it goes down there, I don't think there's a lot of downside in the market left. That is not a reason for me to buy, but I think it's plenty of reason for those that are short to be covering. That's important too. When I look at the NASDAQ, a different story, a downtrend. And the downtrend set in yesterday with that outside date of the downside. We closed under the 100-day average. So the next support, if it can break there, is the combination of the lower Bollinger Band of 18,704 and 18,497. If I'm short, though, I'm going to keep a tight rein on it. Why? Because look at how oversold the market is already. Needs little reason to give you a bounce. When we take a look at the Dow, it's like the S&P. But what's stronger about this is it hasn't been able to close under the 18-day average. All it did is fall back to it for support. You lost the bullish momentum. That was the objective, the 18. You're there. So neutral is the position there. And like the S&P, the Russell's weak. Coming down, could go for the 100-day or the 18. And when you look at this, again, you have a 31 reading plus. So a bigger break and you're going to be in pretty oversold territory. I'd look for short covering 2108 down to 2073. And no, I would not tell traders to sell the market at 2165 and risk all that way back up, because where else would you put a stop? So then we take a look at the notes and the bonds. Well, today you hit the upside Bollinger Band. Why? I'm telling you, it had to do with the stock market down, traders concerned, and that JOLTS report. The JOLTS spooked the market. I was watching right afterwards what the 210 was doing, and it went flat. Now, I don't care where it closed today. You're on the verge of it rolling itself over finally. And getting up there is part of that game. Same thing in the 5-year. So you're getting to that point. In the dollar index, in a bear market, you often rally back and fight a battle at an 18-day average to see if you can resume your strategy. That's where we're at right now. I'd have to rethink my ideas if you got over 101.72.5. But barring that, you've come away, you're no longer oversold. I think the pros are going to probe the short side. And obviously, the question is, do you want to take risk on, which I don't, in front of a jobs report that can do anything? I just don't know what to expect out of it. In the eurocurrency, it's the flip-flop. It's an inversion because 57% of the dollar index is made up of the eurocurrency weighting. So as it comes down in a bullish market, it's looking for its support. And it really hadn't been back down here since this challenge right there. So now the question is, I don't want to see it take out 2 days ago's low. If it does, I'll go back to rethinking everything that I'm looking at right now. In the British pound, when you lose an embedded reading and you don't gain it back right away until this high is taken out, there is a strong probability of the market making a run for the closest main moving average, which is the 18 at 130.60. Bitcoin came down, got to its Bollinger Band. Now, the first battleground was where I try to show you. Look at these moving averages together. I'll prove my point. First break back to the 18-day average fighting, and with it you have the 200-day. So the market's playing its game right there. You see it? Now, key is, what does it do? If this gives ground now, the next support zone's the Bollinger Band. Okay, and from here is where I think the pros covered shorts. They're out of the market now. Why? Because once you get to that and you're not embedded, you're on borrowed time as far as I'm concerned. You only stay under that band 5% of the time. When you come out of a narrowness that isn't super narrow, wider, just what that is. That's how I've learned it. In Bitcoin, rather in Brent, let me tell you the difficulty in this market because it's very clear. You're getting these monster moves that you can't catch. If you think you can, God bless you, and I hope you're doing a great job of it. I would say the average trader, the good average trader out there, isn't catching that on a daily chart. It's too difficult. You're already oversold. You're under the Bollinger Band. I'll let somebody else try to be a hero with it. This was the easier chart to get bearish from. And the reason is you had the lower highs. Then when you cut through there, you had a downtrend. And at least you know if you got back over that, you can't be short. And it went right to the Bollinger Band, and it stuck at it. Yeah, it can push it lower. Then they're saying $60 Brent. But understand, when a market's breaking, everybody comes out and gets overly bearish. You do understand that. When a market's going up, they're overly bullish. Remember copper? I got caught in copper. Remember copper? $5 is going to $6. I was one of those characters that thought that too. I thought, hey, we're on a run. At least I got out with what's left of my clothing on, and the market continued and still has broken down. Again, that's been a long time since June. Well, this is one of these things. As you're down here, people will say, well, we're going lower and lower. Well, why 60? Why not go to 50 or 45? I mean, they like to throw out numbers because they get press because of it. I believe that. Heating oil, big problem in the market, okay? You're coming down, but not my problem. Do you have to heat your home this year by heating oil? Are you saving money? The lower this goes, jump for joy. What about gasoline right now? That's falling away. And one of my good friends called me today. He says, you were right on gasoline. I said, yeah, I told you it was going to give you a big number. The Labor Day holiday doesn't support the market. It's really the celebration of the end of driving, and you come down. Well, this will eventually start thinking about winter, but now is not the time. The market I'm bearish is natural gas. I think these rallies are going to be very limited. The question now is how to get short for me. Not should you be short, how to get short is what I'm studying right now in the market. So you put it all together, and the name of the game is game plans. And that's what I try to give you each morning in a video. People write, do this, do that. I can do so much more in a video talking to you and showing you the different chart points as to what I'm seeing. And you're welcome as a subscriber to write me back, ask me questions. What do I think of a different market? I respond. I pay attention to my subscribers. That's how you grow. I make a certain amount of time each day to respond as best as I can. It's inevitable that I'll get all the calls on a day that there's wild action, and I still run a brokerage company. But I will get to by the day after, typically. All right? Remember, Ira Epstein, how do you get this? You move to your cursor up there. I hope you join us, because I think you'll find, at the very least, 3 months you can quit. You just go to the website, you cancel your subscription. You don't have to talk to anybody, you don't have to be embarrassed. On the other hand, I think if you give it a try, you'll be with me. I'm Ira. Take care.